Hello everyone, I'm Salashmi CS from 30C BCom. Today's my topic is deduction and payments of tax at sources. There are some points. First one is deduction of tax at source, and second, collection of tax at source, and third one is advance payment of tax, and next a payment of tax on self-assessment and notice on demand. So tax deduction at source, that is, it is a convenient method of tax collection. A responsible person making payment on certain incomes is legally bound of deduct at the tax of such income at the prescribed rates. The amount so deducted at the source shall be deposited to government within the prescribed time limit. The tax so deducted is called tax deducted at the source. Okay. Following are important income which applicable TDS. First one is salary and interest on securities, dividend, interest other than interest on securities, within from lotteries or cross world puzzles, within from horse races, insurance commission, payment under life insurance policy, payment of NSS, payment of commission of brokerage, payment under specific agreement, payment of fees or professional or technical service. The first one, deduction of tax from salary. First point is person liable for TDS. That means the person responsible for paying salary to this employee deduct income tax there from at the rate in force. The second one is condition for TDS. The tax can be deducted at source only when the employee's anticipated salary exceeds the maximum taxable limit. Time to deduct tax at source. Tax is be deducted either at the time of payment or at the time of credit to the account of payee, whichever is earlier. And fourth point is the remittance of TDS. Where the deduction is made, the amount shall be paid to the treasury by the responsible officer for TDS. Filing quarterly statement. The employer should file quarterly statement regarding tax deducted at the source from salary. The second one is TDS on payment of interest on securities. So, first one is a person liable for TDS. That means the person responsible for paying interest on securities is required to deduct tax from such interest at the rate in force. And time for deducting tax. The tax is deducted earlier, either at the time of payment or the time of credit of the interest to the account of payee, whichever is earlier. And third, rate of TDS and 10%. Exemption from TDS. TDS shall not be applicable to following securities. First is NSC, National Development Bond, and debentures issued by cooperative society or any other institution, any security of the central or state government. And third, TDS on interest other than interest on securities. So first one is person liable for TDS. That means any person responsible for paying any interest is required to deduct income tax further on at the rate in force during the year. And second, condition for deducting tax at source. Tax is required to be deducted at source in two conditions are satisfied. First one is the payee should be resident in India, and second one is the the aggregate amount of interest paid during the financial year exceeds rupees um, 10,000, where the payer is banking company or a cooperative society or any deposit with a post office under any scheme notified by the central government, and rupees 5,000 in any other case. And time to deduct a tax. Tax is to be deducted either at the time of payment or at the time credit to the account of payee in the book of payer, whichever is earlier. Next, exemption from TDS. TDS shall not be applicable in the following interest. That is, first one is interest paid by a firm to its partners, and second one is interest which is wholly exempted, and third one is any security of central government or any state government, and rate of TDS 10 percentage. Okay, and next point is TDS on payment of winning from lottery or crossed world puzzles, etc. So, person liable for TDS. Any person liable for paying income by way of winning from any lottery or cross puzzles to any persons is required to deduct tax at the rate in force and paid in the credit of the central government. Condition for TDS. No tax is deducted in respect of winning from lottery crossword puzzles where amount received from such winning does not exceed rupees 10,000 in a year. Okay. Next, rate of tax. The deduction of tax source from winning from lottery and crossword puzzles is 30%. Okay. And next point is TDS on payment of winning from horse race. Person liable for TDS. Tax will be deducted at source by race club from winning from horse races. And condition for TDS. That is, no tax is deducted where the amount received does not exceed rupees 10,000 in a year. And rate of tax 30%. TDS on payment of insurance commission. Person in liable for TDS. Any person responsible for paying income by way of insurance commissions will be required to deduct tax at source. And conditions: tax shall not deducted at source in if such income does not exceed 50,000 in the financial year. Okay, and rate of tax in case of company at 10%, in other case at 5%. And seventh point, TDS on payment under a life insurance policy. So, person liable TDS is any person responsible for paying any sum under a life insurance policy shall deduct tax at source. And condition for TDS, a tax shall not deducted if first point is such income exceed rupees 1 lakh and such income is not exempted under section 10(d). And third, rate of tax 5%. Okay. And eighth point, deduction of tax at source on payment in respect of deposit under National Savings Scheme. So, the person responsible for paying any amount deposited in National Savings Scheme, tax shall not deducted at source at 10%. However, no such deduct all shall be made where the amount payment is less than rupees 2050. And 9 point, TDS on payment on rent day. Any person who is responsible for paying any rent shall be deducted tax at source at the rate of force. For use of machinery, uh, to percentage, other assets 10 percentage. Okay, TDS is applicable if such payment exceed rupees 2,50,000. And 10 point TDS on payment under specified agreement. TDS at the source at 10 percentage is applicable when a person pays any such by way of conditions other than kind under an agreement to transfer a capital asset. And last point, recovery of tax. The areas of tax, interest, penalty, or any other sum payable under the Act can be recovered by the following models. Okay, so first one is certified to tax recovery officers. When assessee in the default in making payment of tax, the tax recovery officer will draw up a certificate specifying the amount of arrears due to the assessee and shall proceed to recover the specified amount by uh, adopting adopting the following modes. So first point is attachment and sale of the assessee's movable property. Second one is attachment and sale of assessee um, immovable property, and arrest of the assessee and his detention in prison. And last point is appointing a receiver for the management of the assessee's movable of immovable properties. And last, other models of recovery. So first point is attachment of salary. That is, recovery officer may require to employer to deduct any areas of tax from salary income of assessee and pay it to general government. And second, garnishee order. The tax recovery officer may be notice required to any person from whom money due to assessee to pay it the assessing officer the amount due by the assessee from a court. If any money belonging to assessee in under the custody of any court, the tax recovery officer may apply such court of payment of money under custody. And next, sales of movable property. That means the tax recovery officer may recover any areas of tax by selling movable property. And last point is recovery through state government. That means if the recovery of tax in any area has been entrusted in a state government, the state government may direct the local authorities of the area that the areas of the due from the assessee may be recovered in the same manner of a recovery of municipal taxes. Okay, so this is my topic. Thank you.